Hey there, Bookkeeping Side Hustle community. It's Kate, and I am excited that we will have an interview today with Sean Mullaney, the FI tax guy and the author of a new book, Solo 401k, the Solopreneur's Retirement Account. He just released this book, and I'm excited to sort of be a part of his book tour. This interview is where Sean's going to share a lot about his new book and tips on how to set up our own retirement accounts, because a lot of us are solopreneurs. And then I'm going to ask him, like, so what? Like, now we know this, how can we maybe use this in our bookkeeping businesses, since we're working with other solopreneurs potentially? A couple of disclosure items. Sean gave me his book as an advanced reader copy, so I did get it, but I have read it, so I'm thankful for that information, Sean. And this interview is not financial advice. For sure not from me, and then I know it's not from Sean because he doesn't know our personal financial situation. So this is very general. You need to consult with your own financial advisor for anything official. This is an interactive session, so chime in with comments. I'm going to be monitoring them, and then we're going to give away 3 copies of the books via people answering a trivia question, whoever answers first. So stay tuned and chime in. Get ready, get your hands on the keyboard for that. So that's the intro. Sean, please introduce yourself. Kind of give us the high level about the book before we dive in. Anything else that's important that you want us to know about you?
Sure. Yeah, my name is Sean Mullaney. I'm a financial planner based out of Los Angeles. I'm a career changer. So my first career was in corporate tax. I spent a decade plus in Big Four accounting and at the IRS. And I always had that itch to get into personal finance and eventually scratch that itch. So I went from a career W-2 worker to a solopreneur. And that journey has informed this book, Solo 401k, the Solopreneur's Retirement Account. I myself have a Solo 401k. I joke that I'm both a pusher and a user of the Solo 401k. And the reason I wrote this book is, one, it has a lot to do with my own experience. But 2, I find as I talk to prospective clients, other practitioners, my own clients, there's confusion out there, right? No one, myself included, went to school to learn about how you set up your retirement savings when you're a solopreneur, right? That leap from W-2 world to being a solopreneur itself is daunting. And then you add retirement savings on top of it. Well, it turns out there's a whole lot of opportunity here, and it can be done relatively low cost and relatively simply, right? And we think about 401k plans. We're like, well, wait a minute, that's for like Apple computers. That's for the biggest corporations in the world. And yes, it is, but it can also be for side hustlers, for solopreneurs, for folks in the bookkeeping side hustle community, and for their clients, right? So there's a world of opportunity here, but for some reasons we'll actually talk about a little bit later, it has been sort of underexplored and underdeveloped in the personal finance space. And so that's a big reason why I wrote this book, because there's such a great opportunity, especially in our tech-enabled world where more and more folks are finding self-employment, right? Folks like us, we're becoming more the norm than the exception. And so I think this is just a great time for a book like this.
Awesome. I wanted to share a little bit about my background with you, but it's getting me to my first trivia question. So it's earlier than I thought, but I want to ask it now, y'all. This is for a free book. What does FI mean? FI. Sean is the FI tax guy. So who can comment with what FI means? The FI tax guy. No one knows? Maybe we won't give this one away. Anyone know what the FI tax guy means? This is my background with Sean. I came into my business. I got Ellen Oliver. Okay, we had a bunch of people answer, but Ellen Oliver came up first. Okay, woohoo. So email bookkeepingsidehustle@gmail.com and I will get you connected for that book. It stands for financial independence. And that is my background with Sean. I heard him at least 2 years ago on the Choose FI podcast. I'm pretty sure that's where it was. But it stands for financial independence. And my own journey creating my bookkeeping business was because I wanted to increase my family's income. I wanted to save. I wanted to potentially be able to have my family have that early retirement and financial independence. So I think this is, a lot of people are in this community because they're on a similar financial independence journey. So that's what FI stands for, if I didn't know, the FI tax guy. So and I'm glad that I have been able to learn from Sean over these couple of years, and the broader personal finance, financial independence community. So, all right, well, let's kind of dive. So we're going to call it training, dive into training. We're not going to get technical, y'all. His book has technical scenarios. Like I said, I read it. It's very well laid out in like a technical way, but also in an understandable way. And when I say technical, I mean there's like scenarios of, a pretend person making so much money and how much can they put in retirement. But I just thought I'd give Sean an opportunity to maybe hit us with like the 3 main takeaways that we as business owners might need to know first. That's a good place to start. Again, y'all ask your questions, and I'll try to, but our starting point is going to be, this is a big topic. What are the 3 main takeaways we should walk away with?
Yeah, Kate. So I'd say first, the biggest takeaway is just the opportunity that's presented here, right? Solo 401ks for solopreneurs are a huge opportunity. Why is that? I've got 3 main reasons. 1, low fees and simplicity, right? You have the options from some of the largest financial institutions in the world offer solo 401ks. They offer them with investments that have very low fees. They offer them for practically no fees themselves, right? So this can be set up very inexpensively, a lot of simplicity involved. So that's the first main opportunity. The second thing is you get this opportunity to contribute as an employee, right? So you think about a workplace 401k and, there's this limit, right? It's $20,500 a year. It goes up to $27,000 a year if I'm 50 or older, right? Well, guess what? The solo 401k has those same limits. So that's an incredibly high limit as an employee, but it gets even better because of a third opportunity. And that's, you get to contribute as an employer. So think about, you're at a W-2 job, you're making $100,000. That's great. Your employer offers a 50% match for the first 6% of salary. So let's do some math. I know it's early in the morning, but
it's okay.
We'll do a little math, right? So $100,000, 6% of $100,000 is $6,000. You put $6,000 into the 401k at work, the big employer matches 50 cents on the dollar. 50 cents on the dollar is $3,000. Mm-hmm. That's great financial planning right there, because that's an instantaneous 50% return on the $6,000 you put into the 401k. The $3,000 employer contribution, fantastic, right? Well, with the solo 401k, it gets much, much better, at least from a tax perspective and from a wealth building perspective, because you're not limited by the parameters of your employer's plan, right? 6% in, 6% matched up to 50 cents on the dollar. No. You get to decide based on the IRS limits. And generally speaking, in a case where you make $100,000, that employer contribution would be something like $18,500 at its maximum. All right. So if we're, doing our max employee contribution, $20,500, max employer contribution, $18,500 and some change, we're over $39,000 that we could get into the solo 401k, much better than what we could have done at many W-2 401k plans, right? So that's a really big opportunity. So all those things combined are the biggest opportunity. That's the first thing. Just tremendous opportunities here. Second thing I'd say is, there's this debate in the personal finance world about traditional contributions to retirement plans. That's where you get a tax deduction up front, but then it's taxable later on in retirement, right? That's one bucket. Second bucket is Roth contributions, no tax deduction on the way in, but tax-free on the way out, and tax-free growth. Everybody loves that. Well, should I do traditional? Should I do Roth? Should I do some of both? Well, guess what? With the solo 401k, you can do both. And that's a huge advantage the solo 401k has over other retirement plans. And you as the solopreneur are in charge. So you might say, oh yeah, I really want to do the Roth thing, so I'm going to max out the Roth. Or you might say, no. I want my benefit today, right? Maybe I'm at my highest earning years, so I want that benefit today. So I'm going to do traditional. Or you might say, hey, I'm not even really sure, so I'm going to do a little bit of column A and a little bit of column B. Here's the thing though, you get to decide as a solopreneur. So that's really cool too. And then the third thing I would say, and this has to do with a little bit of practice history, is I believe for most solopreneurs, the solo 401k represents a much better opportunity than the SEP IRA. Now, the SEP IRA has a great history and has helped many solopreneurs build up tax advantage savings. That's great. But you have to think about, well, wait a minute, we could do a SEP IRA or we could do a solo 401k. Why might we want to do a solo 401k instead of a SEP IRA? Two main reasons, and it goes back to the first two lessons, right? One, the solo 401k allows employee contributions. SEP IRA does not allow those. So you're able to get a lot more into that solo 401k in most cases than you can into the SEP IRA. So that's the first one. The second one is the SEP IRA. As of now, and there is a proposal to change this, but as of now, SEP IRA does not allow Roth contributions. The solo 401k does allow Roth contributions. So I think for those two main reasons, I have a whole chapter in the book that goes into a lot more detail on the whole SEP IRA versus solo 401k question. But I do think in many cases, the solo 401k is a much better opportunity for solopreneurs, for the clients of folks like who are in the bookkeeping side hustle community. I think in many cases, you're going to think long and hard about that solo 401k before you do a SEP IRA.
That's fantastic. I'm curious of those of y'all watching. We've got quite a few people watching live right now. Do you already have a retirement account for yourself that's not one that's done have you taken this plunge where you've gone through the steps to set something up? I'm curious about the folks watching. So Sean, one of the things as I was thinking as I read your book, and I mentioned this to you, is everyone wants me to think about what my tax situation is now versus 20, 30, 40, 50, when I'm 60, 70, and 80, and who the heck knows. And I'm just thinking here, you crazy people, I have no idea. Because the government has a role that's out of my control. What is the tax situation going to be? And then sometimes I'm like, you know what? Maybe my husband is going to build the SaaS product that I hope he builds, and we're going to make a ton of money and be have super high income in early retirement, and we'll be retired, but maybe our income won't be lower. I have no idea. Yeah. Or maybe we're going to be traditional FI people, and he's going to retire from the Navy, and we believe in a modest lifestyle, and maybe it will be lower. I have no idea. So instead of sweating that, we've just kind of done Roth and done traditional. We have Roth accounts and we have traditional accounts, and I feel good about that, and also love the fact that I'm not sitting at my computer crunching numbers and really giving a lot of brain space to worrying about that, because so much of it seems out of my control. I know financial planners eat this stuff up and think about it, and I'm just for me, I like that both the Roth and the traditional, and so that option for someone like me is okay, good, a little bit of this, half in here, we'll call it good, and I'm comfortable with that. So I don't know if you think that's a wise decision or not, but that's how we have approached it. I don't have a solo 401k yet, but just with our own other retirement vehicles that we've tried to diversify between the tax advantaged versus tax deferred.
So, Kate, first of all, big picture, I sort of love your approach, right? I'm not here to say your approach is the approach for you or anyone else, but I like what you're prioritizing, which is, hey, let's just build up wealth. And then as we get older and we get a little more clarity in terms of our future, right? Maybe we fine tune it later on. So I sort of like the very big picture you've laid out for your own situation, right? Here's how I've got two things to consider for the listeners or the viewers in terms of traditional versus Roth. And I'm not here to permanently resolve that debate for you or anyone else. When I approach that debate, I like to look at polls, right? I think that's a good way of at least beginning the analysis of saying, well, am I at a poll that suggests Roth is the right answer, or am I at a poll that suggests traditional is the right answer? Or am I sort of somewhere in the middle, but maybe I'm closer to one or the other? So let me lay out two polls for you. So one poll might be, I'm 25 years old. I just graduated grad school. Maybe I just got my master's of accounting degree, right? And I go to work for a firm. And it's only, it's October. I didn't work for the first 9 months of the year because I was in grad school and I was taking the CPA exam or whatever I was doing, right? So it's October, November, December, and I'm a rookie at work. So I'm not even making that much money. So in that first year, my income's artificially low. And I have this hope that in the future, my income's going to go way, way up, right?
Sure.
So at that poll, right, boy, Roth looks really good. Why am I taking a tax deduction when I'm at a low tax rate because I only worked for 3 years and I'm only a rookie? Why not just get the Roth and just go with that, right? That's the Roth poll. Now let's think about maybe we're a star NFL quarterback, right? I don't think there are any NFL star quarterbacks in the audience.
Almost.
But let's just say we were, right? And we're thinking about Roth versus traditional for our, Kansas City Chiefs 401k plan, right? Well, if I'm a star quarterback and I'm going to be a broadcaster after I retire and I've got all these endorsements and advertisements, I basically have no hope. My income's always going to be high. So maybe I just take the Roth. That's another poll, right? So that's a second Roth poll. Third poll, though, this is the traditional poll, okay? The third poll is maybe I'm doing that financial independence, retire early thing, and I'm 45 years old. I make $300,000 at work. And I'm going to retire in 5 years, okay? And at age 50, I'm going to have artificially low income because I'm retired and I'm not collecting Social Security. That's a traditional poll, okay? Because, hey, now I'm making $300,000. I might as well take the tax deduction while the getting in is good, right? So I deduct, okay? And then what I do is when I'm 50, 51, 52 and early retired and my tax return claims that I'm poor, okay? What do? At that point, I do these Roth conversions where I take the money in the traditional retirement accounts and I affirmatively convert them to Roths. That's a taxable event. But the idea is, I was making $300,000, so I was paying 32%, 35% federal income tax. Well, now I'm artificially poor because I'm early retired, so I only pay 10% or 12% federal income tax. So that poll is a traditional poll, okay, if that makes sense. And then tactically, so those are some of the polls out there to think about. Where are you compared to those three archetypes that I laid out? But here's something else to consider. At work, we have 401ks and we have 403bs, 457s. I'm going to assume that most of our audience either works for a private employer or is a solopreneur, and so could either do workplace 401k or could do solo 401k, right? But then in our own individual capacity, we have these IRAs. We could do a traditional IRA or we could do a Roth IRA. Let's think about a Roth 401k for a second. If I put $1 into a Roth 401k, that's great tax-free growth. Who doesn't like that? But there's a real trade-off. There's a real opportunity cost, as they said in college economics. Mm-hmm. I forego $1 into the traditional deductible 401k. So I forego a tax deduction by doing that Roth 401k contribution. All right, so that's a real trade-off there. What about at home when I do my Roth IRA or my traditional IRA? Well, the way the rules work, and we don't have to get too technical here, many in the audience are going to find that they don't qualify to deduct a traditional IRA contribution, but they do qualify for a Roth IRA. So for many Americans, the dynamic duo is going to be, maybe I do my traditional deductible 401k at work because I lock up those tax deductions, okay? And then at home, when I go to my financial institution portal, I max out the Roth IRA. I'm doing the Roth in the IRA as opposed to the 401k because at home, I don't lose a tax deduction when I do the Roth IRA. So maybe I max out that Roth IRA at home. And then at work, solo 401k, large employer 401k, I max out the traditional deductible 401k. So I'm getting a little bit of the best of both worlds and I'm not leaving any tax deductions on the table. Again, you got to do your own research. But I find for many Americans, that's sort of the dynamic duo where we're getting some of both and we're not leaving any tax deductions on the table.
It's so interesting having this conversation because I keep thinking about it for myself, and then my brain immediately switches to a client. We're thinking about, like, no secret here, I'm not making $300,000 a year, but I have clients that do. And so, that's why I want y'all to be thinking about this conversation is so important for us in particular as people who are working with business owners, like in their finances. Like we are right in the middle. So we can be starting to educate ourselves on these topics to have just enough knowledge to like start planting seeds. That's where I think I'm going to land on this. On this topic. So like, I'm not going to be the expert. I'm not going to keep up with the different levels that are changing every year. So usually things kind of go up by like $500 here or there, different limits. Like, but the seeds, and doing one ourselves is really powerful. So Sean, I don't know if you've seen these comments, but most of these folks here are saying they've either researched it, but they haven't done it, or they've done the easiest step, which is to do that first Roth IRA, the $6,000 a year. Like that's kind of, I think, the baby step versus treating, because anyone can do that, whether you're a W-2 or a entrepreneur. But these solo 401ks, or you have to have your own business to do. I mean, am I right? Like you have to have
Yes.
self-employed income. So that seems like a much heavier lift. Yeah, Ellen's agreeing that she's not quite at that $300,000 mega earnings, but she has clients that are. So that's what I'm hoping that people in our community are listening to, wearing both hats, your own personal wealth, which is important, y'all. Like that's why we're working. Like you don't work forever to then have nothing. Like or organize your personal finances as a way to make sure you have legs to go the distance in your business, because if you're a disaster, if your personal finances are a disaster at home, it's going to be hard. That's additional stress that an entrepreneur doesn't need. So the better we can organize our own house, the longer we'll last in business, I think. So I want to ask another trivia question right now. So get ready. This is for book number 2. Where does the name 401k come from? Where do we get, why do we say 401k, y'all? While I'm waiting for that answer, I was just going to say, maybe Sean, get your advice on. So Crystal's saying she's researched all these plans, but hasn't set any up. How do we push through that? Like, because it's hard. I don't know. It's like decision fatigue. So answer that question while someone is chiming in with, where do we get the name 401k?
Yeah. So
Kelsey Blackwell got it. IRS section. Yes, it's the IRS section 401. Subsection K, right? That's
exactly right. Where the 401k moniker comes from. Absolutely. So
Kelsey, be sure to email me. How do we get past our inertia though to set this up?
So I'll toot my own horn, right? So my new book is available on Amazon, ships October 4th.
There's a link below, y'all, if you want to pre-order. So some education in this regard is very powerful, right? So my book aims to provide that education, right? It doesn't lay out every last scenario. Kate and I were talking before the conversation. This book could have been 100 pages, 200 pages, or 400 pages. Right. I chose about 200 pages. I'm not here to tell you I made the right decision, but I try to make it approachable for the layman, but also add some value for fellow practitioners. So I think a lot of this is education and just sort of understanding some of the different parts that are out there, right? It gets complicated pretty quickly, but it's navigable. I talk about in the book about the solo 401k. I talk about something called a qualified business income deduction, which for us solopreneurs is actually a really good thing. I talk about something called an S corporation, which for some solopreneurs could be a really good thing, but you got to think about it in the context of these other things. So I would say, for your own planning, do get some education. There are resources out there. I would say, what you pay for online, you usually get that commensurate value. Not always, right? There's some really good online resources, but if it's free, it's not to be relied on, right? It could be, hey, this is informative. Let me go find some other information. Does that validate that? Does that not validate that? I will say the IRS has a decent publication, IRS Publication 560. That's IRS Publication 560. Not perfect, but a decent starting point in terms of, hey, what could I contribute and what are some of the contours of these plans? And then, in terms of when you're working with your own clients, I have this in my own financial planning practice. So, I work with clients in financial planning and, what sort of estate planning arrangements do you have in place? Oh, you don't have a will. You don't have maybe a revocable living trust. Maybe that's something that's good for you. Well, folks come to me and they pay my fees.
And one of the things I owe it to them to tell them is you still should go to another professional, to a lawyer in your state, and work through these things and establish these things. And that can be frustrating for us, right? Folks come to us and we think we're gonna have all the answers, and it's one-stop shopping, and we're so great, we can take care of you. Sometimes we just have to acknowledge that reality that we need to bring in other practitioners, right? So if you're working with your bookkeeping clients and you're like, oh, I got some solo 401k stuff, I think this is great, but I don't have all the answers, that's okay, right? First, refer them to their tax return preparer. That could be a resource for them. You might be their tax return preparer, and maybe this is in your depth, or maybe it's not. But you may have to refer them out to another practitioner. So I think sometimes that's the right answer. I mean, my hope is that on the solo 401k front, my book is providing a bunch of that education where at least folks can have informed conversations. Bookkeepers can have informed conversations with their clients. Clients can then go to maybe their tax return preparer or their financial planner. I'm trying to reach a lot of financial planners with this book. One, because they themselves often qualify for the solo 401k.
Oh, yeah.
And two, a bunch of their clients need to be thinking about planning in this regard. So I do think, part of the reason I wrote about solo 401ks is because if we think about personal finance, there's been a lot of ink spilled about a lot of different topics. This is one of those topics that, frankly, not enough ink has been spilled about, especially as, self-employment, being a solopreneur, side hustles, those are all growing and they're going to continue to grow. So, I hope I'm closing some of that gap. I fully understand that, not everybody's going to get my book, too bad, right? But hopefully, more and more awareness gets, risen because of efforts like this. And Kate, I really appreciate you, giving me the time today to talk about it. It's just so important. There is a great financial future out there, but you do have to take affirmative steps for it.
Exactly. And I want to be a part of that. Like, why do I do interviews for the bookkeeping side hustle community if it's not to help people build that life that is going to allow them to do things much greater than just their business? I mean, and think about all the help we provide anyway. Like, we are helping people build great lives for themselves. We're like indirectly doing that by making sure businesses accounting is good. I guess I have a technical question. You said there hasn't been a lot of ink spilled about this, and we're not going to endorse any like specific ways to invest, but like a lot of financial independence people are kind of like scrappy bootstrappers, kind of do DIY. We want to go with the discount brokerages and stuff. I know I have one myself. Like, can I go log on to my existing investment portal and get support in setting this up? Are they equipped to buy your book and then say, okay, I see which of these, he uses a lot of characters he's created, like different examples of married and old and young and single and wealthy and side hustle. And so I can say, okay, this sounds like me. I'm going to go do that. Do I log on to my account and do it myself, or do I still need someone like you? And can my clients log on and do it themselves, or do they need someone that is adept at setting this stuff up?
Yeah, so great question. In terms of setup, most of the brokerages have pretty good portals these days where setting up the solo 401k is not that challenging. Okay. It requires more paperwork than, say, setting up an IRA or a Roth IRA. Okay. 100%. And there's a little bit of some guidance in the book in terms of educational knowledge on that front. And you might need, in terms of setup, you might need some professional advice in that regard. Oftentimes you won't, but sometimes you might. I'm not here to say that it's always a 100% DIY process, but the setup can generally be done online. They need signatures. These days they can do digital signatures and those sorts of things. So it is very navigable online in terms of the portals. And then in terms of, hey, what's the maximum contribution I could make? Things like that. There are online resources. There are online calculators. Some are better than others. I talk about them in the book.
Right.
There are going to be times where you're going to want to work with your tax return preparer. The other thing about folks in the bookkeeping side hustle community and their clients with a significant self-employment income, you generally speaking these days need a professional tax return preparer.
Yep.
So that's at least a backstop on the other end, right? So there's the planning end, and you might need to work with a financial planner or tax planner on the planning end. Some people could do it themselves, right? And that's always a tough conversation. Some DIYers are great. Others, they should be working with a planner. But then, so that's on the front end. And I like thinking about this more on the front end. I have a chapter on that mentality of shifting from, hey, we're going to do our tax return, so let's do our tax planning now. I don't like that. It doesn't really work well with the solo 401k. Do the planning during the year, right? Don't wait till tax season. And look, if you waited to tax season this year, okay, fine. Do what you can, and then, optimize in the future. But the nice thing about the solo 401k is by April 15th of the following year, you get a chance to do over some of this stuff, for some of it, not all of it. But during that tax return plan, preparation process, you can revalidate what you did already, right? So you can say, okay, we made so many contributions to our solo 401k. Were those correct contributions?
Right.
And if not, we can explore some remedial action we could take. So it's, I get that question about DIY versus using a professional. It's a tough one to give, advice on. I will say this, though. Most folks who are self-employed absolutely should have a professional tax return preparer. And using an educational resource like this book can help you have a much better conversation with them, right? I think that's part of this journey, too, is we don't want to just go to the doctor's office. Hey, doc, I got a problem. What medicine should I take? Okay. Right. We want to get out of that mentality versus like, hey, we can contribute to this conversation too. We can ask probing questions, and let's do it that way versus just taking the advice of our tax return preparer on April 14th when they've had 3 hours of sleep, that sort of thing.
Right. I'm going to ask our third question, and then I'm going to tell you all about my tax return situation. The third question, and Sean, I'm changing this question because so many people said that they do have their own individual Roth IRA account. Where does the name Roth come from? Whether it's inside of a 401k or whether it's our own, $6,000 a year Roth, where does Roth come from? I hired a tax return preparer as of 2019, I think, to do my 2019 return, y'all. I got to, because I was self-employed, I wanted to do the S Corp thing, and I was out of my league. For the longest time, we had basic retirement accounts and my husband's W-2 income. I've had W-2 income in our marriage, but it was really pretty simple, and it has been worth it. So I agree. Okay, Crystal says, named after Senator William Roth from Delaware, who I guess was instrumental. Old guy, like the Roth has been around a while, right, Sean?
Yeah, the Roth's so old it came out while I was in college. And in fact, if you're, there aren't really many of these in the book. Frankly, this might be the only one. So every now and then as an author, you lay an Easter egg, right? You leave something for the readers to find. And there's a fun footnote on this particular question that may or may not mention the lead singer of a very popular 80s rock and roll band. I'll leave it at that. But there's a little bit of an Easter egg in the book on that. But you do get the right answer to the question if you find this footnote as well. So, but good question, Kate. That's a really good question.
Awesome. And I feel bad. I read the book, but I don't know that I hit all the footnotes. So I got to go back. I did get through it. Ooh, did Crystal saying Dave Roth? David Lee Roth, is that his name? Some guitar.
That is the lead singer of Van Halen. The second lead, well, actually the first lead singer of Van Halen.
Yeah.
Because it's like, oh, was it named after David Lee Roth? No, it was not. Kate has the right answer. It was named after, I believe now, the late Senator William Roth from Delaware, actually.
Yep. Crystal, email bookkeepingsidehustle@gmail.com and we'll get you connected for that book. So I'm kind of looking through my notes. Oh, you know what? I'm going to ask one question that has been asked in the chat about the concept of an S Corp. Ellen says, do I have to be an S Corp? I'm only an LLC who uses the Schedule C right now. I want to just add a little bit of flavor to this. Sean, my perspective as a bookkeeper who did not come with a tax background, I feel like S Corp is like the dime a dozen one trick pony or something that a lot of tax people are doing to clients. I don't know. So I am one. I understand the benefit of the write-off of the employer side of the self-employment taxes. So I'm getting educated on like why tax preparers do this. I've been able to form my own opinions now about what I think is a good threshold kind of in general, because sometimes I think people suggest them at way too low of income for folks. But talk about this S Corp thing. Does your book kind of go into greater detail about that? Because I'm seeing it a lot as for the clients that I serve, like their tax preparer makes them an S Corp. So I'd love for you to elaborate on that.
Yeah, I have a whole chapter in the book on S corporation.
Yep,
so
exactly.
So this is such an interesting thing. It comes from the late 1950s, and it comes for reasons that have nothing to do with us and our clients. All right. So it comes from, hey, we have a family corporation. We're a small manufacturer. Why do we have to be a regular corporation where the regular corporation pays its own tax and then we pay tax on dividends, right? That's double taxation. Classic problem with American taxation is this double tax of corporations. And so in the late 50s, they said, okay, if you're a small corporation, right, you're a small manufacturer, that's the archetype they were going to. Well, you can make this S corporation election and you'll only pay one level of tax. Just the income from the corporation will just be reported by the shareholders. And so only the individual shareholders will pay the tax. There'll be no corporate tax. And that was supposed to help small manufacturers and the like. Well, what happened was that got morphed to, hey, I'm a single professional. I'm a solopreneur. What I could do is I could be that owner. And a lot of the earnings of the corporation could be reported on my tax return as business earnings, not as W-2 earnings. So what happened was folks were like, hey, it's the S corporation. You'll save on FICA taxes, right? Think about when you're self-employed, you have that Schedule C,
both
right?
sides,
That's just the self-employment income that goes on your tax return. You make $1 of self-employment income, it's subject to the self-employment tax on that Schedule SE on the tax return, right? So generally speaking, let's use 14%, right? So every dollar of self-employment income, at least up to the FICA threshold of 147, attracts 14 cents of self-employment tax. Nobody liked that outcome. So instead of making $100,000 on my Schedule C, maybe I set up an S corporation and I pay myself from the S corporation reasonable compensation, and that's a whole other can of worms, right? But I pay myself reasonable compensation. Let's just say it's $40,000. So I only pay FICA tax on $40,000 now, and the remaining profit, about $60,000, just shows up as business earnings, and I don't pay payroll tax on that. So it went from, hey, we want to protect small manufacturers to, hey, I'm a single professional. I just want to save on FICA taxes, right? So that was the big draw, especially as applied to the bookkeeping side hustle community. Well, then the question becomes, everybody's like, for the longest time, oh, you make a certain level of income, you got to do an S corporation. Well, I'm not there because of a few things. One, the S corporation often lowers the amount of solo 401k contributions you can make because, when you're Schedule C and you're making $100,000, you can just base that solo 401k contribution, which could be up to $39,000 if you're under 50 today. You base it off that Schedule C number. A whole lot can go into that solo 401k. If you are now making $40,000 in W-2 income, you have to lower the amount you could put into the solo 401k. So that's a drawback. This thing called the qualified business income deduction, which is very new, only started in 2018. A lot of times it's lower if we have an S corporation. So that's a drawback of the S corporation. The other thing about S corporations, Kate, you know this, there's a new tax return to be filed, independent of your personal tax return. There's a Form 941 every quarter. There's a Form 940 every year. There's
payroll
a Form
payroll provider fees. Yep.
So there are compliance costs here. There's different tax returns, information returns that need to be filed. So these days, I think practitioners need to be aware that yes, in most cases, the S corporation is going to save on payroll taxes, but that savings has to be balanced out against what's it going to do on the compliance side, what's it going to do on the solo 401k side. Maybe the client's not interested in solo 401k, but maybe they are. What's it going to do on the qualified business income deduction side? And I think you need a little bit more of a holistic tax planning focus there. I hesitate to just say, oh, well, you're at 100,000 of income or you're at 80,000 of income. You just need to be an S corporation. I don't believe that, but different people can approach this different ways. But the main reason, just to go back to the original point, why do folks do this S corporation? For 90% of S corporations these days, it's about reducing the payroll taxes, which is absolutely legitimate tax planning.
So I like you as like that coach who's really hard and like making you suffer today for like, the Super Bowl when you're 30, and you're only like a 15-year-old. Because so the reducing the half of payroll tax that's more like dollar in my pocket today stuff. And you come at it with such of a wealth mindset, which I think is a longer term mindset. Like, it's just funny to hear you say like, but you can't put as much away for retirement if you're, and I'm like, wow, that's someone with a long-term view. But at the end of the day, like, that's what it appeals to me about the financial independence community and this different way of thinking that most Americans aren't there yet. But I want to be wealthy. I don't want to be a work burden for my children when I'm old. I want to be able to give generously when I'm old, like crazy generously. And I also want to fly to wherever my kids are, like once a month to see my grandbabies, right? And that's going to be expensive and it's going to cost a lot for tomorrow's Kate, not for today's Kate, because like that I can blow on Chipotle because I saved my half of my self-employment taxes. So there's a trade-off like you talk about.
There's absolutely a trade-off. And one thing I tell parents, right? The greatest financial gift parents can give their children today while their kids are kids is securing mom and dad's financial future, right? Mm-hmm. The kids have time to make their own wealth. The kids have time to pay for their own school. But if you are a burden to your children when your children are adults, that is going to be very painful for them. So the best financial gift mom and dad can give the kids today is securing mom and dad's financial future.
I couldn't agree more. I mean, that's the journey that my husband and I are on right now. You've been a small part of that. Your resources have the general it's a mindset shift. It wasn't something I was taught necessarily. I did come from a family who has thought about finance stuff, but it wasn't really like talked about, I guess. I know my parents planned, but I've had to learn a lot of this kind of on my own. So y'all, if y'all have any more questions, ask them in the chat right now. I've got one more like big question for Sean, but if y'all have, we got him live now. So Mike, what question for you now, Sean, as we kind of think about wrapping this up is like, okay, so what now? So I've read the book. Ellen says she's going to get the book. She won it. She's going to read it because I won it. But I hope other people. Yeah, there's a link below. Get that advanced copy, y'all. I'm going to give them away to my clients who would benefit from this as a gift. I think I already imagine some that like I'm always because business owners, like I'm realizing to be a cool business owner, you need to give your clients gifts, and so I think this would be a perfect one for the right client. But now I know a little bit. I'm armed and dangerous with this good financial planning advice. Maybe I've implemented it for myself. How do I use it in my business? I mean, I know I can't give financial advice. I don't want that responsibility, and I don't want to take the time to learn it all. But what do I do now that I've gotten a little education on this?
Yeah, great question, Kate. And I think the way you approach it is by asking questions, right? The best advisors don't have every answer, right? The best advisors have conversations and ask questions. So it may be something as simple as, well, what are you doing for your own retirement savings, right? To secure your own future? What are you doing for tax planning? Right. And did you know there are opportunities out there to marry both of those where you could build up retirement savings and get potential tax deductions or get tax-free growth on assets? Right. So I would start with, hey, just ask some questions. And it may be that a new client comes to you and they already got some really good arrangements in place. And, maybe they're 90% of where you might want them to be. Maybe that's good enough, depends on the circumstance, or maybe they have no idea. And you just asking a question turns on a light bulb for them. And maybe they themselves then complete that journey. Or maybe it's also, like I said earlier, sometimes as professionals, the right answer is to say, here's some things you should consider, and you should also call another professional, right?
Mm-hmm.
Maybe that's a tax planner, tax return preparer, maybe that's a financial planner, depends on the circumstance. And I will say in our industry, right, the financial planning, the tax industry, things can be a little difficult in terms of finding advisors and the right advisor for the right circumstance. Sometimes a client's got to go out there and do some research, and maybe they fill out 5 different intake surveys of different financial planners, tax advisors, tax return preparers. And so sometimes you got to do some diligence to find out what are the services that are offered and how do you click with that particular advisor, right? There's no one advisor out there who's the advisor for every person, and different personalities require different matches, right, in terms of that sort of thing. So it may be, one, just asking a lot of questions of your client, understanding your client, and then 2, just opening, turning on some light bulbs in terms of, hey, there's some opportunities out here. Did you know about the solo 401k? There's a book I could recommend. This is the sort of thing you should be talking with these other advisors about. And then also, like you said, Kate, you should be doing this for your own circumstances, right? And I talk about in the book, not everybody's going to qualify for the solo 401k, and that's all right, right? So you should be thinking about your own journey and where does something like a solo 401k fit into your own journey.
Y'all, I would love to be able to read out loud, so I capture on audio any ideas that y'all have about, like, even though y'all haven't read the book yet, what you've learned from this interview. What do you imagine is the so what? So what do you do with this information? How are you going to use this in your business? I'd love to read your responses out loud. I'm going to share a couple. So I have live tweeted reading books before. So, like, what if you read Sean's book and take a sentence? It doesn't really matter, right? Because you're just kind of ringing the bell in your potential clients' minds that you're someone who thinks about retirement. Maybe 1 or 2 quotes per chapter over the course of the week that you read the book. That could be some social media content. And I've done it before with books, like the entire books versus just sharing a quote from one book. But that could be a way. And then share your own circumstances, like Sean said. Like, figure out, like, can you say, like, hey, y'all, I just logged on to my such and such account and created my solo 401k, or your SEP IRA, or your whatever, like, or if you're growing a big firm and you're offering retirement to employees, that's great. The point is, we want to be helping our clients think about this, because we all have clients who won't qualify for a solo 401k too. Let's not forget about them. Let's think about how do we take our knowledge and share it. So I love the idea of just like being, send an email to your client list about, hey, I just started this, my own account, and I want to encourage you to do too. It was easier than I thought. Maybe something like that. And then, in Sean's book, he talks about dates sometimes, and dates can be like dates on the calendar, and dates can be great for social media content, y'all. So when he talks, I think he used the word October, and you talk about do stuff in October to be ready for December. So snag his dates that are mentioned in the book and use that as content for your clients. I know there's, April was mentioned because of tax return deadlines, and you could possibly just take direct quotes from him. Like, I just read a book that said this date was important for this reason, and share that out via email or social media or something. So did anyone else? Ellen says she's going to talk to a financial planner to see how to set this up. So share that journey with your clients, Ellen. Feel free to say, here's what I learned from my financial planner's meeting today. I'll read one more. Kelly says, give clients examples of how much they could contribute as an EE and an ER. So the EE is employee and ER is employer.
Yes.
Based on their approximate income for this year. Show them some sample numbers. That's a great idea, Kelly. Thanks for sharing that. Keep them sample, and then you're not giving exact financial advice. But you could say you could keep it general enough to where you're just like giving them that something to think about. What do you think? Any other things that you're thinking of, Sean, based on some of the ideas that I just shared?
Well, one resource I want folks to be aware of is I have a YouTube channel as well. Not
Perfect.
As popular as the Bookkeeping Side Hustle YouTube channel, but Sean Mullaney videos, just in the YouTube search engine, just Sean Mullaney videos. And this month, I am uploading, as the book comes out on October 4th, I'm uploading, one's going to come out, it may have already come out, it comes out at 9, I think, or will come out, just different videos about the solo 401k, sort of continuing the journey in shorter form on YouTube.
Yeah.
And October, so my book is available for sale now on Amazon, Barnes & Noble. You can pre-order, right? It ships October 4th. October 4th was picked with intention, meaning now is the time for those Schedule C self-employed folks. October is really good. Hey, you know what? Now's the time to be thinking about this stuff. So we talked about forming a solo 401k. It requires a little bit of time, right? You don't want to be doing this December 26, 27, 28, right? So October is a great time because we have 75% of the years done. So we have income and expenses for that. We have at least some visibility into income and expenses in the fourth quarter. And we have enough time to at least get that solo 401k set up, and we could start doing our tax planning from there. So I think of October for a lot of solopreneurs as the tax planning season, at least in terms of solo 401ks. But you know what? Maybe the YouTube algorithm didn't take you to Kate's video until December 15th. Well, one, you still could take some action. You're probably gonna have to be quick. But then two, it's, well, okay, maybe I didn't get things done in time for 2022. Although even in 2023, there's still some solo 401k opportunity. The book talks about that. But just get better for the future, right? Maybe in 2022, you weren't able to optimize your retirement savings for whatever reason, cash flow, you didn't get to it in time, whatever it is, okay, fine. Just do better for 2023 and going forward, right? That's, I think, the big message here is there's a ton of opportunity on the table. And yeah, 2022, October is a great time to act on it. But if for whatever reason, 2022 isn't the year to optimize on retirement savings, fine, let's just commit to doing better in 2023 and 2024 and going forward.
The best time to plant a tree was 10 years ago, but the next best time is today, right? So you
that's exactly
right.
right.
Don't let that the hearing this interview too late, because I'm hoping people are listening to this years in the future. Take action. I'm excited to find your channel though, because again, I'm not going to become an expert, but I can reshare your videos. Like, hey, I listened to Sean's quick 5-minute such and such on this really detailed topic that maybe some of you business owners who follow me would like to know. And so I can share that with my, the channels that I use to try to build, to get clients. So thank you so much. I think we should wrap up, guys. Thank you so much for the crowd who listened. Thanks to our winners, Ellen Oliver, Kelsey Blackwell, and Crystal Lugo, who won the copy of the book that'll be shipping on October 4th. Email me at bookkeepingsidehustle@gmail.com, and we'll get that situated. Sean, congrats. Thank you so much for being someone who's spreading the message of that's getting people to think about these super important topics. I'm just such a big believer in the fact that we need to be thinking about our ongoing legacy, and you are equipping people to do that on complicated topics. So, oh, Ellen is asking me to share a link to your channel. Do you have it handy, Sean? Are you able to chat?
Let me see if I could put it in the chat.
If not, y'all, I'll put it in the description of the YouTube video right away as soon as we hit pause on this. So, how about we just do that, Sean? Because I'll put it in the description of the YouTube video, y'all. We're going to say goodbye, and we will maybe we'll have an encore with Sean for his next book, and maybe we'll give away even more. But thank you for today. Thank you for your time.
Kate, thanks so much. Really enjoyed this conversation.
All right, bye.